then because there will be a few more things which the exam has. So let me start the recording.
They already been uploaded or no, not yet?
No, I have uploaded it. Pretest 2. Let me see here. Share. Here, this is the US robotics, and your Sage 50 is there too. And they have given you some of these things. So if you notice, this one has a, in the beginning, it has create the accounts which are missing, set appropriate class options for each asset account only, record the customer information, record the supplier information. Let's see. Employee information, record inventory information, enter linked accounts associated with each module, use only the accounts available. So do not open any accounts other than what we have done in the beginning. If some of the accounts in your link accounts might not be there, so they don't want you to default those. And so let's see here. So this one is the sequence I'd like you to have. And that sequence is, as I always told you, if you notice here, you can follow the same sequence, add the following account. So you can, in the exam, you can add or delete the accounts you want. And once you have done the accounts, then your chart of accounts is done. And since your chart of accounts is done, you can then enter your trial balance. So once you enter your trial balance, you're safe in the sense that all you have to do is you have to now just set up your modules. Because sometimes some of these modules, people do not know the sequence. And when they are setting them up, they do not really put the trial balance first. They actually, before the trial balance, they actually put in a module. So when they do that, some of these accounts which you use in some of the modules, they get blocked. So then you cannot really put in your trial balance in a general journal because those accounts won't appear. You won't be able to access them. The system blocks them for purposes of security so that their subsidiary ledgers do not get and do not have an imbalance, because they all have to have, before you start, they all have to have a receivable of 572538. They all have to have the inventory of NS1, NS2. Now, this one here is item by item, but you will only get the word inventory. I just made it so that maybe you sometimes they give you each and every name of the inventory item. So normally this will all be in one total. Will go under only one account called inventory account. So now here, computer, okay, that's fine. So all of it is,
Sorry, just to interrupt you. So you're saying from NS1 and NS5 should all be under one account under 1310 as inventory?
no, in this problem, you will have
Do them
to,
individually.
yeah, individually. They
Okay,
won't have
okay.
one inventory account. Normally, they would have let's say the 1350.
Okay, total.
And you can put
Okay,
it,
I
but here,
understand.
yeah, but here,
Yep.
I have put them separately. So,
Okay.
okay. Okay. Okay, so let's see here. What is the first thing they're asking? So they're asking you add the following accounts. So if I go back into my system, so all of you, we have to go to company, go to chart of accounts, and this yellow thing will appear. And then on that yellow, you say create. Oops, okay, okay. So file create, or you have the red book. And then I will just show you this.
We're not seeing it.
Yeah, I know, because I just went into the next, where did it go? Counts. So now you can see it. This is your next window. And then from here, you go in here, or you can go file create. All of you know that. I can do file create. And then that's the next window, which you always used to get. As I said, all the modules are, when they're created, they are basically the same way. Robotics. Okay, why is it not showing me? General ledger, no. Okay, here. So they said that we have, let me see, add 2241 QPIP payable. So you have 2241 QPIP payable, QPIP payable. And then you just, make sure you know, it even tells you it's a subgroup account. It says A. So click on, don't leave it on group account, then subgroup account, and then go create another. Now you have another one, 3150. 3150. They don't have that account, which is your Alex Proya's drawings. And as I said, drawings or withdrawals is the same thing, okay? Sometimes they just use the word drawings, and you create another. And that account was kept as G, if you notice, so it didn't have to. 4060, and that is sales returns. And it is a subgroup account. And by the way, this account is created so that we can actually see what percentage of the goods were returned by the customers. This is a very sensitive account because sometimes people, they don't realize that we have accounts, but you just type them in or just do not really understand why they are there. But there are certain accounts here which are very sensitive for the operation of the company, like sales returns. It is very difficult to get your customers back if they have to return goods often. I'm sure we all do that. He says, I always have to return the goods to these companies. Okay, and so you stop buying from them, and so that's the reason why they want to check as to what is the percentage of returns out of my total sales. So you can calculate, like you have $1,000 sales and you have $10 as your returns, or $100, then you have 10%, which is very high. But normally it's not that high. But they know that even a smaller percentage, because it's word of mouth too, because people start talking that I'm always returning the goods. So as we go along, some of these accounts, I will explain as to why they're there, not because they look good. It's because they actually want to make sure to see as to both of them, sales returns and sales allowances. As to, sales allowances is when goods are not returned, but what we do is we tell them, don't return it. we'll give you a percentage off on those goods. Now, those could be because we sent them the wrong goods, or maybe, they ordered and we made a mistake. So instead of them returning or our company going and picking it up, it cost them more. They said, okay, what if we give you an allowance? Would you keep it? So this way, you don't really have. So these two accounts, as I said, for people in sales, it's very important. So it's A again. So this gives you sales, which is already there, less sales returns, less sales. That if the goods are returned, it cannot be in my revenue. So I reduce my revenue by that amount. And so it goes down to my bottom line, that I can actually then get taxed less because I didn't really receive the money for these things. So that's why we calculate net sales. So then we have 4080. And 4080 is sales allowances. And again, it's a subtotal. And later on, when we are finished, I'll show you as to how it looks there. Then we have 5030. And these are bank charges. And bank charges is a group account, so we don't have to worry about that. Then 5170. And that is cellular G. Cellular. And it's a group account, so we don't have to change anything. And then 5222 QPIP expense. And that is a group account, and it's done. Now, this should complete your chart of accounts. This tells you. And let's see the chart of accounts. So you go company, you go chart of accounts, and then you can actually, in order to find out, so notice here what we added. Let me see. You see here, this is what we had. So revenue from sales was already a subgroup account. Less your discount, less your
I'm not
return.
sharing, Mr. Tariq.
Pardon?
You're not
Okay.
sharing. Sorry.
No problem. Yeah, you should let me know.
Thank you.
Because I sometimes I don't really. Okay. So you see here, let me open it. So you notice some of these accounts here. The subgroup accounts are done so that we get a subtotal. So you see here, we needed a subtotal for these because they didn't want to just add them together. So here, you see this here, which is a bank account and another bank account, and then we need the bank total. So all the others are group accounts. Now here, if you notice, we needed a group, subtotal for all my payroll accounts. EI payable, CPP payable, federal income tax payable, and then we send this to the receiver general right here, which is a subtotal of all the payables for the payroll. This is for federal or the CRA, and this one we have to send it to the Minister of Revenue. So if you notice here, this total goes to the Minister of Revenue. This goes every 15th of the next month. We are required to send deductions at source, which companies deduct from their employees, so that the government can have regular revenue coming in and they don't have to wait. So if you're wondering why they do this, they are required by law. If you have more than 3 people in your company, you have to institute what we call a payroll system. And the payroll system means that by law, you have to make sure that you do the deductions according to the tables the government gives, and send that amount from which you have deducted on behalf of your employees to the government every 15th of next month. Now, obviously, they are not going to wait till the end of the year. I mean, governments have all kinds of projects and they need the cash or the revenue. And in order to get the taxes a little bit earlier, what they do is they institute that. That's why, I don't know if you know, if you have read or not, but because the government says, if you have more than $2,000 taxes to be paid in a year, you will have to start giving the installments. So if you always have your over deduction and they actually you get a refund, then you're okay. But if you have $2,000 and more dollars to be paid at the end of the year, they will come after you and then they will send you the amount you have to pay as installments. If you do not pay, they'll charge 6% interest on that money. I don't know if you are familiar with that or not, but I'm just letting you know. So in case they send you a letter saying you have to start paying installments, do not ignore it if you don't want to pay the 6% interest on it. Okay. So some people do that. They don't really mind because they don't have money, so they actually don't pay. But so these are subtotals. If you notice here, now GST, QST, here we have GST, charge on sales, QST, or sorry, GST paid on purchases, and this has to go to your government for your return, GST, QST return. This is your QST. And so when you make the report, you put these figures, and then you have to write a check at the end of for each month, whatever you collected and what you paid. You'll get a refund if you paid more than you collected, but you'll have to, if you receive more than you paid for purchases, then you have to send it to the government. And let me tell you, they'll come after you for this very, very seriously. Because this is again, it's a regular revenue for the government. Then we have these sales, less your sales discount, less your sales returns, less your sales allowances. And that basically will give you your, let's see here, sales allowances. Did we make a mistake here? 4080. Yeah. You see this? We didn't change it. So it will not work. If I try to print, let me see, display. Okay, not this. I think I'll have to do the balance sheet or something. Here, report and balance sheet. Yeah. So I'm not going to go through because this window you cannot see and it doesn't show. So I'm just showing you that it is not printing. So I'll have to go back. So all you do is you click on it. Once you click on it, you will get the window you're looking for, which is where we create our accounts. And as such, general ledger here. And notice here, I put it on a subgroup total. It should be a subgroup account. And once we do that, I will show you to see if your chart of accounts is right. You will see that when you check it, I'll tell you how to check it. So we have accounts. So here's your accounts. Go into reports and go into balance sheet and say, okay. If right away, it will give you an error if your chart of accounts is not correct. And if it tells you, say, okay, then you will get this here. balance sheet here. There you go. So that means all your chart of accounts are well, they are actually correct. And once and then if you want, you can actually also see as to the type of accounts you have. So what you do is you go here and you go into accounts. And in accounts, it says report. And under report said display chart of accounts. And say, okay. Once you do that, you will see that it will show you the type of account you have here. So account. Okay, next one. This is another one. Chart of accounts. See this? They tell you bank, asset. So in your exam, you will have to change this. Some of these here. And we have done that before, but I'll again do it. So this will be inventory. Okay, this is receivable. We have that. But the account class is accounts receivable. Okay. And anything else will be current assets. And this here, inventory is all inventory. And then machinery is capital assets. So in order to do that, you will have to, again, all you do is you go into your company chart of accounts. So here, this is what you will have to go with. And let's say you want to change now. Let me see. Okay. So I want to change the accounts receivable to a account type accounts receivable. So go click. And you will go into the window where you create your accounts. Okay. So you'll be here. Okay. Now notice here, if in order to make it to instead of asset into accounts receivable, you click here. It's once you know it, you see this, it appears here. Now click here and see if accounts receivable is there. Here's your accounts receivable. And you don't have to go back, you don't have to go back and forth. You see, the next account, you can just click here. And if you click here, the next account you get is payroll advances. We can call it current assets. Or do we have current assets here? Current asset here. So they're very small, so you have to make sure that don't think that they have all of these. So now we go to the next one. You can see it doesn't matter. This is not what we need. So we'll go into inventory is the heading. And notice here, NSI robots is basically an asset. I want to call it inventory. So inventory. Okay, next is also inventory. And the robot, NS2 robot, go again, go inventory. Next again, we have 5 of them. So all of them will be called inventory. And we have next one, again, 4 is also inventory. And 5 is also inventory. Now, the next ones are fixed assets. which we call capital assets. So click again. And you have total inventory is total. You don't have to worry about it. Store equipment. Store equipment is a heading. So machinery. So make sure you know if it's a heading or a total, don't have to change that. So here's your capital asset right here. Make sure you look at it closely. Okay. Again, the next account is computer. Again, fixed asset, which is now capital asset. And we get computer. Then again, as I said, you don't have to save one at a time and then keep on coming back. After a while, you learn it. Store is again capital assets.
What does that mean, store account?
Store, you don't, you have a store
You mean store the building or the
where you, if
or
you
the
run a
inside,
business,
what
don't you
there
have a
is
store?
inside of the store?
No, that's a common word. We say go to the store. No?
Yeah, but I mean, as an account, it is what? It is
It's a store. It's
the
just like,
store, which is it is an asset belong to the company, or it is what
yeah.
there is inside of the store.
No, the inside is called merchandise.
Okay.
So the store is the building.
Yeah. Okay.
Sometimes they write store build, it's shop or building or store building. Here they didn't write. Okay, so, and I think that's the last one. Total store and equipment. And once you have, you can actually, you can get out because it's already saved for you. And then go and check it and print it out because that's what they want in the exam. You have to print out your chart of accounts again, not your yellow, this one, not your yellow screen, but you go reports and you say chart of accounts and you say, okay. And notice I'll show you now, they've all changed.
Tara, could we have another option besides capital asset for the store equipment or no?
No, they
That's-
don't
that's-
have,
No,
normally they would have fixed assets, but
okay,
capital assets is probably being used, this word is being used, so. So
Okay.
now notice here, accounts receivable, current asset, inventory, capital asset. And I mean, here, you could say current liabilities. These are all
Okay.
current liabilities. Then you will have, there might be some other for payroll and liabilities, so maybe, and this is long term. So if you go in there, you can always actually take a look at it. And so let me see as to what they have there. Okay, let's see here. And then we go into, let's see here, bank loan. Accounts, general ledger. So let's see as to what is it for bank loan class option and see. Now notice, take a look. They're all these, Lisa.
Yeah.
Okay, so if you notice what you were asking, they have credit card payable, accounts payable, other payable, sales tax payable, employee deductions. But for whenever you depends on what you are clicking, you understand? So
yes,
so they will have you see current liability here, current liability. Now, if you go back
Why would we change it though? I guess that's my question. Why would, because they asked us to change it, make sure it's current liability? How do we know that
Yeah,
they're
because they
asking
say
us to do this?
there are current liabilities and there are long-term liabilities.
No, I understand that, but I'm saying when we're being presented the question,
No,
like right
because
now,
when
I'm
you,
looking at the pre.
because they want to default it, because it basically, when they actually, when they export it into Excel, they have to know as to how to classify them.
Okay, that's
Because-
fine, but like, if I'm going back to the pretest here, you know, and you say, it says here, one of the things is set appropriate class options for each
Mhm.
asset account only. Where does it tell us what they want, what account they want it to be associated with? We just
No,
have to
you,
know?
no. You as an accountant, you have to do that.
But no, okay.
I mean, it's not that somebody wants or accounting wants. No, it's you. If let's
Okay.
say you have an account and it says expense and it's a cost of goods sold. I mean, it doesn't make
Okay.
sense then the type. You see, that's what
Okay.
I'm trying to tell you. So you see
Okay.
here, if you go into for example, you see here, you can always go straight into. So you see here, if I go into let's say accounts
GST.
receivable, and now notice they will have different all asset accounts here.
Okay, that's what the options are. Okay.
Those are the options, yeah. So if you go into
Okay.
expenses, you will get like cost of goods sold and the expenses you want to default, okay? And
Okay.
there might be cost accounts which go into
Okay.
cost of goods sold, okay? So this basically is required in your test, so you make sure. I will do it again anyway, but you will get it. It's not really that difficult. It's just that the names are such that sometimes people don't identify or they are not really very clear about it. So I will continue this thing tomorrow, so we can actually we will be able to finish it tomorrow, or maybe maybe day after, because it's a little bit longer, I think.
Okay.
Okay, so I'll
Mhm.
see all of you. I'll see you all tomorrow, and so have a good evening for the rest of the day.
You too.
Thank you. You too.
Okay,
Thank you.
bye-bye.
Thank you so much, sir.
Bye.
Appreciate you.
Bye.